is that this audience is not... That's broadly audience. So some of the... I'm going to explain more. Hello and welcome from Mumbai as we start and kick off our Budget 2017 coverage. I'm joined with an interesting panel of guests here with me. To my right, spanning both tax, indirect tax and industry. To my right is Ketan Dalal, tax partner at PwC. To his right, Anup Kalawat, Senior Director, Deloitte Haskins, Rajiv Thakkar, Chief Investment Officer at Parag Parikh, and finally PK Singhal, President of MCX, the exchange. Thank you all for joining me. So, Ketan, let me begin with you. What we are trying to do is really define a landscape, right? The budget speech is already written out, so there's not much that can change today or now. But let's try and understand what are the issues that we are looking at as we go into this budget across a variety of issues. But let's start with direct tax.
So in direct tax, I think one of the things that people are looking at on the corporate side is a reduction of corporate tax rates. And I think the reason is that a couple of years back, what had happened is that the finance minister had announced what seemed like a parallel thing, that is phasing out of exemptions and a roadmap for reduction in tax rates. The first one has happened more or less, but the second one hasn't happened. So there is, I think, a justifiable expectation in relation to that. That is one part. And I think raising of exemption limit for individuals, so that's on the tax rate part. And the broader part, ease of doing business, I think, is a very, very critical dimension. And I think the government has appointed an issuer committee for ease of doing business, simplification and litigation. They have already submitted the report, but for some reason it is not yet in the public domain.
Right.
So that's what...
right. So that's the corporate part. What about individuals, people like you and me?
So I think on individuals, again, simplification is obviously very critical, and one of the things that is being looked at, I understand, is to reinstate standard deduction, because today it is extremely cluttered. So instead of all that clutter, a standard deduction, I mean UK has it, US has it, UK of course I think has it for almost 6,000 to 10,000 pounds, and even adjusting for purchasing power parity, that would probably be 40 or 50,000 rupees here. So one is looking at that, and I hope that comes because it can reduce a lot of clutter and needless small issues on litigation, TDS, etc.
So why should we be reducing taxes? It's a sort of layman's question.
Because I think what has happened is that the exemptions were bringing, you're talking of corporate, right?
Yeah, it could be corporate, individual in the form of expansion of slabs.
Okay, so in relation to corporates, first of all, the effective tax rate is 23%, but it is not 23 across the board. So for an FMCG company, it will probably be 33%. Okay, but for some companies like power companies, it may be 18% because one of the units may be exempt, the other may not be. But most of the exemptions are being phased out from March 17, which is 2 months later. Some of them are of course grandfathered and will go on for a few years. But I would say 80% of the exemptions other than SEZs are virtually gone.
Right.
If the exemptions had gone and the effective tax rate was lower as a result of that, then it stands to reason that the tax rates also should be reduced, because I think we need to get competitive. So for example, with China where it is 25%. So I think that...
Right, so we have to get competitive globally, and firms have to be obviously more efficient and lean, so and tax is an important aspect there. We'll come back to individual in a moment. Let me get some views from a commodities exchange. Mr. Singhal, so what's your sense? I mean, we're trying to understand the landscape as we go into this budget, and what are the issues or the predominant issues that we are staring at right now?
Actually, one of the big positive development during this year is the launching of E-Enam. E-Enam means Electronics National Agriculture Mandi. So it is an electronics platform whereby Government of India has taken an initiative, Ministry of Agriculture is running into that, and they have linked the various AMC with a national platform. So we feel that with the passing of GST, there will be a lot of positive development in the agri side. So that is one of this thing, and the Prime Minister, our Honorable Prime Minister has repeatedly mentioned also that the commodity market needs to be more relevant to the basically general public, because commodity is a place whereby if the prices increases, then the consumer suffer, and when the prices reduces, then the producer suffers. So there need to be a lot of synergy between the demand and supply, and the commodity derivative market is already playing that role of giving a signal. So I think in a time to come, and this is year government will also look into the various other parameters whereby the warehousing can be further strengthened, infrastructure in the agri
So what are
side.
you looking out for? So one is, let me ask you two questions. So one is, to what extent has this worked, the whole electronic market and the linking of agricultural produce marketing committees, and what's the pending task, and what would you expect from this budget?
Pending task, I think after passing of GST, lot of pending things will be, because there is an interstate movement of goods. And then second thing is that there is one transaction tax which was imposed 2-3 years back. Nowhere in the world there is a CTT. So CTT is commodity transaction tax. STT is there where there is a justification that
And what's the impact of this? Could you give us numbers?
Yes, the impact is very important. Before the imposition of CTT, the volume in the commodity derivative exchanges was on average 60,000 crore single side per day, which has, after imposition of CTT, it is reduced to about 25,000 crores per day. So about 50%.
And you're saying a direct linkage between the
Direct linkage,
imposition
and
of
there
the
is
tax and
another
the-
thing, after the imposition of CTT, in our gold contract, just like for example in MCX, our gold contract is a 100% compulsory delivery contract, gold and silver, where Ahmedabad is a delivery center. All the trades on the settlement date needs to be basically either delivered or delivery taken off. So there the impact cost is bid and spread difference between the buy and sale cost.
So if I were
the
to-
CTT impact cost on our gold contract was lower than the impact cost on COMEX.
Right, so you're saying remove CTT or at least reduce
Now
it?
we are saying reduce the CTT.
Reduce. Okay. The second thing you're saying is that keep moving on the integration of markets, right? So that's your broader theme.
Yes, sir.
Right. And the third is you're saying warehousing and the other infrastructure, which in any case previous budgets have been talking about.
Yes.
Right. Okay. Let me come back to you. Rajiv, let's pick up very quickly. Markets going into this budget, how are they? And I know they've been relatively strong and there don't seem to be any overt concerns. Where do you stand?
To put it in context, when the government came into power, it was grappling with 2 or 3 things. One was the huge quantum of stalled projects, which was stalled for a variety of reasons.
Yeah.
The second was the huge problem of NPAs in the financial system, which threatened to drag down everything with it. And the third thing, which is not of the government's doing, but which is more of a commodity down cycle plus challenges on export front in IT and various other things. So while we have been seeing some progress on stalled projects, but the other 2 challenges remain. So it would be interesting to see what happens to address those.
Right. So what in your mind would be the 1 or 2 things the markets are looking out for or expecting? I mean, many of what you're saying are long-term issues. I mean, NPAs are long-term issues, stalled projects are long-term issues, and it's not clear whether the budget in itself can answer those questions.
So one discussion which has been going around is whether to put bad assets into ARC or have a bad bank kind of concept, because we are facing a situation where the public sector banks are almost 2/3 of the entire banking system.
Right.
Now government does not want to reduce its stake to a minority. It doesn't have money to capitalize these banks. These banks are having a bad asset problem. So how does growth happen? How do these banks start lending again? Because unless the investment cycle picks up and private sector, the capital intensive projects are very leveraged.
Yeah.
So they don't have capacity to really put their own money in. So how does the credit cycle pick up again is a question, and some indications on capitalization of banks or transferring the bad assets to ARC,
Right.
something like that would
Right.
be.
So you're saying banks are a concern area, which they have been, but apart from banks, do you feel things are more or less, or at least beyond the purview of this budget then? I'm talking about corporate India,
There
balance
will be
sheet.
factors beyond this budget, but some action would need to be taken. So
Okay.
what do we do to create employment to kickstart exports? Because while IT industry's problems may seem to be their own, but at the end of the day, it's a country's problem where about half of our revenue comes from there. So it's not just that you let industry fend for itself. So some movement on that will be needed.
Right,
Again,
so here's a question that we've been asking on Policy Watch on RSTV for a while now, for many weeks now. To what extent is the global overhang going to influence markets in the next few months, and to what extent is it going to be domestic?
it will be both. So domestic, again, we are looking at introduction of GST. Everyone agrees it's long-term positive, but there will be implementation challenges. Also, what people envisage GST as one simple rate, a
It's not
simple
gonna happen.
implementation.
Yeah.
I've been going through some presentations on how to implement it, and it's going to be challenging. So even
And we're going to
after-
talk to Anup about that in any case. But
Sure.
what else, I mean, in terms of capital flows, I mean, obviously domestic mutual funds are strong. They've been propping up markets, continuing to pump money in. Internationally, I mean, foreign institutional investors have been pulling out. There's a lot of uncertainty on that. How is it likely to, move forward in coming weeks and months?
Okay, so if there's one thing that capital markets are keenly watching from this budget, it's about long-term capital gains taxation. So
Okay.
the Prime Minister, while addressing a gathering, said you need to be prepared to pay more tax, and again in a couple of days the Finance Minister came and said that no, we are not looking at taking away the zero tax on equities. I think some changes in long-term capital gains are expected, and it remains to be seen what exactly comes about.
Right. Anu, I'm going to come to you in a moment because both Mr. Singhal and Rajiv will be leaving us. Mr. Singhal, can I come back to you? So, if we were to talk about, let's say, agriculture markets and commodity markets becoming bigger, becoming world's class, in some levels, let's say, competing with the London Metal Exchange or other exchanges, Chicago and so on, what do we need to do?
We need to be the price setter, especially in those commodities where we are the main consumer. Just like, for example, again, for the sake of repetition, it is just like, for example, gold. So India is, as we know, used to be called as Sone ki Chidiya, and gold is a product whereby government last year tried for gold monetization, gold bonds. Although gold bonds scheme subsequently got some success, but gold monetization is totally failure. Why it was failure? Because in India the ladies have a mentality that they are having a basically sentimental value with the jewelry. So I think the government should also think, which I think they should do. Somehow we have to ensure that how we can become a price setter for gold.
Right.
And for gold, becoming a price setter, as we know, China is doing lot of novel thing how to become a price setter. Similarly, in metals, there are lot of metals wherein India needs to be, we talk of a make in India. Now Mr. Trump is also talking about make of America. Probably either it is a coincidence or they have.
And it will be interesting to see how this budget responds to that,
correctly,
yeah.
and for that there is a big need how to ensure that the base metal contracts which are derivative, they can become basically compulsory delivery settle, just like we have gold and silver, because in London Metal Exchange also and CME also all the derivative contracts results in delivery.
Right.
So here earlier, because the infrastructure was not there and because of taxation issues just like GST and other things, so those developments have not taken place. So we feel after this passing of GST bill is passed, once it is implemented and initially whatever various issues are concerning GST they are resolved, I personally feel that there should be lot of developments in the development of commodity market, and India try to become a price setter in number of commodities where we basically we are.
We've run out of time with you. Thank you so much, Mr. Singhal and Rajiv, for joining us. Anup, let me get a quick word in and then I'm going to go to Ketan. The three key issues that you're looking at from an indirect tax point of view going into this budget.
Yes, so from an indirect tax perspective, GST is expected to be introduced in the first quarter. So what we need to do is a seamless transition from the current regime into GST. So the budget need to work on aligning the taxes, aligning the exemption, and aligning threshold, so that essentially the transitions become smoother, faster and hassle-free.
So, and what's your sense of the preparedness today?
The preparedness today is well advanced from a corporate. People have been working for more than about a year now on the GST implementation. There has been some kind of a last mile clarity required in terms of which product falls into what tax group? What is the valuation mechanism there? What about anti-profiteering? How are they going to implement anti-profiteering? So these are the concerns the industry do not have today. But what the budget can probably do is to align the current rate of indirect taxes with that of proposed under the GST regime, so that what they will, when you transition the system into GST, you do not have much of an issue from anti-profiteering. You do not have much of an issue from a price reduction increase perspective. Whatever be the litigations that are today, if they come out with some sort of a scheme under which they can, those people who wanted to fast track the litigation and get a resolution into that, if they can introduce those, that will make the change and life easy for industry.
Right. Well, you know, the Union Budget 2017 is scheduled to be presented at 11, but we're of course watching to see if there's any change or any slight delay in that. We'll keep you posted on that. Let me get Ketan back on the direct tax front. So when you started, you talked about corporate taxes being the predominant issue that you're looking at. What about tax administration and, you know, sort of what I would call allied issues that we've been talking about all this while, but may or may not have seen sufficient resolution?
That's a very good question, Govind. In fact, for years, my belief is that the tax complexity in India is there, just as it is everywhere else in the world. But I don't think it is, you know, a complete outlier. I think the real problem is administration. So anything which leads to a better administration, and let me talk of two things, you know, ease of doing business. And we know that India's ranking in the ease of doing business has improved only marginally, and tax is one of the reasons why it is being held back. So if things can be done for ease of doing business, you know, that is very, very important. An example of that is today you don't have time limits on a variety of things, whether it's issue of withholding certificates, whether it's disposal of appeals. So that itself leads to a level of complexity. You know, so anything which is, you know, smoothening, let's say, litigation. Let's look at another thing on administration, pre-assessment filters. So today what happens is an assessment order is passed, and then it develops a life of its own, sort of goes on for years, and you don't know how you have to put the lid on it. So pre-assessment filters is one more example. You know, you mentioned administration. So I think administration, and I would just add one more thing.
Yeah.
The need for articulation of a thought process and stability. Capital gain is an example. You're not sure what is happening. Somebody says 1 year, then 2 years, then, you know, will it become business income? I think we need to articulate a thought process of what is the thought behind taxing it in a particular manner, and then live with it for a 5-year period, so that investors are also aware what they are what they are going to look at in terms of a tax regime.
Okay, and you haven't touched on retrospective taxes yet, but I'm assuming you will. Okay, so let me welcome Mr. Mohanty and Mr. Prem Narayan. So thank you for joining me. So let me get an infrastructure view first. You know, what I'm trying to understand is what is the landscape that we're looking at as we go into this budget? What's working for you? And this may include or may not include demonetization and its impact.
No, infrastructure at the outset in the last couple of years, the bigger companies' pockets has been drained. The financial condition has been poor. The second important point is infrastructure is a big ticket item because it requires a lot of, it's a capital hungry business. So if you have to induce investment in the infrastructure, first the basic issue need to be addressed. Why the bigger companies' pockets or the situation, financial condition is so poor today? That's primarily due to the poor governance or dispute resolution mechanism, for which a lot of dispute money has been here, and the financial condition of these companies. Before doing anything...
And when you say disputes, this is over road contracts mostly?
Road contracts, power contracts, or any other government contracts. Today we are in a situation where a sovereign agreement, which is a concession agreement or any other similar agreement, is not looked to be honored by the central government or the governments. So what the poor private guy do that time? If a project is delayed for 4 years, almost the cost is doubled. And the interest payment outlay is almost 30-40% higher.
Right, so you're saying you're going into this budget with some amount of stress on balance sheets, and not just for Gammon, but I'm assuming for most
of the companies.
Okay.
Unless you have to, whether it is related to ease of doing business or dispute resolution or governance at the grassroots level, all three are interlinked things. That need to be addressed before even just giving a inducement at the top at a macro level. Unless it is populating to the micro level, it does not work today.
Okay. And I'm going to ask you what that could be in a moment. Mr. Prem Narayan, yes, you want to pick up from where? Yeah.
I think points he made are very interesting, but what I'd like to add on is that today we have got a process of L1 in the country, and I believe that's wrong, because what happens is then you're going on the basis of just pricing.
you should be allowed, let's say if I'm a company, I'm bidding for a large road contract, I should be allowed to submit what I can do for community development. So those are factors that need to come into play just rather than L1. That's one. And that of course is based on technical qualifications of companies which are sensible. Point number two, Mohanty made this point about arbitration. If I might say, today, let's say there's a 100 crore dispute which has been resolved by way of arbitration in my favor. What I get is 75%. 25%, let's say it's the roads, NHI holds back. On that 75%, I have to pay interest. On that 75%, I've got to give a bank guarantee. Now, and there is no time on that, so the government takes its time. So therefore, on that 75 crores, if I'm not to pay any interest, I only provide a bank guarantee, and that 25 crores is security. So then there is an urgency on the part of the government to settle it quickly. So that today there is no urgency. Point number three is that there should be a special, now I'll tell you why. It's very important to have a special allocation for infrastructure projects in terms of pricing. It should be at least 3.5% lesser today. And also the other point that he made about concession agreements, I'll give you a point in case. The first PPP project of its type in India, which is listed in AIMS, is Noida Toll Bridge. Now, there is a concession agreement, and that has been reneged. You know, the court, because of some filing of PIL by some residents association in Noida, here is, now what has it done? Globally, it's had a major impact on the country, because there is INVIT which is there, which is going to attract foreign monies to come in at concessional rates, and this is sticky money that sticks here. And we need that. So as a result of reneging on our concession agreement, you know, the High Court gave a totally incorrect judgment.
So let me ask both of you again. I think what we are also trying to understand is what can or should the budget be looking at, or the budget process that follows the budget, actual budget, presentation of the budget.
Budget, there are a couple of things in the infrastructure investment, especially the tax issues. Today, if you see, there is a 10 years holiday for an infrastructure investment, but at the same time, you have a MAT of 20% compulsory. So, one hand you give a concession for 10 years, another hand you take away through the MAT. So, these duplications has to be taken out. Second thing is, if you make an investment into the infrastructure sector, even to get back your principal, you pay 20% dividend tax after paying the tax on the income. So these are double taxation on your investment you are making to get back even the principal. Forget about making a return on that. So these duplicacy of this has to be taken if you have to really create infrastructure investment attractive.
Right. But what's your outlook in terms of deal flow? I mean, are you seeing more projects, and maybe potentially if there are more projects and good projects, balance out bad projects? Or not so good projects?
I'll risk myself by telling that when there is a lot of initiative at the macro level, at the government policy level being taken, that's not percolating to the grassroots level, because like demonetization might be, you require a de-bureaucratization today, because this bureaucracy is becoming the major bottleneck today to deliver any of the program or initiative.
So I was asking about an example. So what is an example of where, let's say, there is a slowdown in the project and the challenges that you face at a grassroots?
No, today the primary issue is the old legacy is bogging you. For example, my experience is in last 4 years, 3 years time, we have completed 8 projects with a 3.5 year delay. We paid a additional interest during construction of nearly 1200, 1300 crore, and we have not got a 1 rupee compensation against that. The additional loss of cash flow is around 3000 crore. How a company which is have a 10,000 crore asset basket to absorb a 3000 crore cash flow mismatch? That's practically impossible. Whatever we do, the honest, the way we are transparent, or whatever efforts we put, innovation we do, the engineering we bring in, the money, 3,000 crore money is a big amount of money in a 10,000 crore asset basket.
Right. So, okay. So I'll come back to you in a moment, and we're running out of time. Anup, before we sort of wind up, the key challenges in the transition or migration to GST, including, let's say, the budget math, because there is a GST deadline of July 1st. The numbers that are put out today will have to align with that. If they don't, they'll have to be realigned. How do you see that process going?
So, I mean, as of now, the budget, there is a fair amount of clarity that the GST is going to come to be rolled out on 1st of July. So you can, based on that, you can make a fair amount of estimation on what is going to be the budget revenues required. So the real challenge is in terms of realigning the tax rates, so that what happens is that when the GST gets rolled out on 1st of July, there is no huge realignment or no huge gap in taxes. if there is a huge difference between what is the GST tax and what is the excise duty plus VAT put together, then it would result into a challenge in putting up a mechanism for monitoring that there is no profiteering by various organizations.
And are you also seeing rates go up, particularly service tax, which affects all of us in some way or the other?
So there is definitely a possibility that the current 15% total tax cost on the service tax is not aligned to any of the GST brackets. So there is a possibility that the rate could probably go to 18%. There is also a possibility that just like other goods, there could also be a bracket, various brackets of services. That is what it was indicated the other time. So that could be another initiative the FM can look at, try and put different rates to different services. Again, when the GST is ultimately rolled out, you can align and transition in a smooth manner.
Right, yeah.
Not as an infrastructure professional, as a citizen of this country, I have a small take on this issue of taxes. See, when we are
Growing good, it's only a small take.
we are growing up, we had learned that this is a socialistic country. There's a lot of facility like education, health, road, everything was free. So that people were paying tax to get these things free. Today, even to breathe free air or pollution free area, you have to pay money. And whatever the things like health, road, even road, all most of the roads are today toll road. You have to drive on a road, you have to pay toll. Health, for health, you have to pay. Education, you have to pay. So today, why the income tax is so high if we are what for one? And the things for which we are not paying, that we are paying through our nose, through corrupt practices. So today, why the tax and why the government, where the government is spending that money? Why the tax and paying public will not be asking for answer for that?
Yeah, or reduce taxes, as we were discussing in the beginning. Okay, so we're going to be running out of time very shortly. Mr. Premnath, let me ask you a slightly broad question. This is a landscape question once again. What is the dominating or the presiding issues that we should be addressing in terms of, let's say, better life, quality of life for companies, businesses, investments, citizens, investors, savers?
Prosperity will come through manufacturing and services. My chamber, which has reached almost 250,000 enterprises, 86% are SMEs. So if they flourish, and they are actually in the last 3 years, they've been contributing much faster than the other channels in the economy. But the biggest issue that I have to create a better life is that they need to prosper, is that the bureaucracy needs to be better, that is one, more friendly. Second thing is the cost of money. I continue to shout at rooftops on behalf of my chamber. Interest cost continues to be very high. CGT, which has been there, Credit Guarantee Trust, is now coming into vogue after a lot of effort. The pass-through, Reserve Bank has been driving repo cuts, the banks have not been passing that through. The government needs to, and the Reserve Bank needs to get a whole lot tougher on that. I also believe that for the SME sector, to make business better, life better generally, for the ecosystem, again there should be a reduction in interest cost. And lastly, what is extremely important is the credit rating agencies, which are global agencies, unfortunately economies which are in the doghouse in the West are rated better than us today, which is an emerging market, and we are doing well. So my rating affects the cost of money that comes into my country. And therefore, that's interest cost is very important.
And that's a battle. So last word, Ketan, going in, the direct tax is something that affects us all and will affect us all once the budget is presented. Your key expectations?
So as I said, simplicity, ease of doing business, administration reform, and of course addressing certain structural issues like taxing only real income as opposed to artificial income under say Ind AS or ICDS as it is called, income confidence.
And reduction in corporate tax in keeping with the time.
Yes, and also dividend tax needs to be addressed.
And individuals?
Individual, I think the exemption limit certainly should go up, and standard deduction.
what's your number?
I would say from 2.5 lakhs to 3.5, but I think there should also be a concept of indexing that limit to an inflation index to be adjusted every 3 years, because then we are not at any mercy.
Right.
It automatically gets adjusted as per inflation.
Right. Thank you all for joining me before the budget, and we hope to look forward to see how many of your suggestions and poses will actually be implemented or first incorporated in the speech and then implemented. It's back to you folks for the bulletin.